Let's talk about claiming a domestic partner as a dependent. So, what does the IRS check? Let's really have a clear idea about what the IRS checks. So, what is actually a domestic partnership? Let's have a clear definition of that. So, a domestic partnership is basically an alternative official relationship status to marriage, and the IRS doesn't recognize it as a marriage under state law. Therefore, if you are in a registered domestic partnership, you are not married for federal tax purposes, and you may not file a federal return using a married filing jointly or a married filing separately filing status. And it's one of those things where you have to really see what really works for you. And prior to the Supreme Court's 2015 decision that legalized same-sex marriage across the United States, most registered domestic partners tended to be in same-sex relationships. So it's one of those things where the IRS, again, I want to clarify things here. The IRS allows you to actually file taxes, but not as married filing jointly or married filing separately. So what does the IRS consider a domestic partner? A domestic partnership is an unmarried couple who live together and have an interest in receiving many of the same benefits as a married couple receives, such as health insurance, Social Security, pension, and tax benefits. The IRS does not consider people of the same sex and opposite sex who are in registered domestic partnerships, civil unions, or other similar formal relationships as married under state law. So if you are a same-sex or opposite-sex couple who is married under state law, you generally must file as either married filing jointly or married filing separately. However, as an exception to this rule, if you meet the requirements to be considered unmarried for tax purposes with a qualifying dependent, the head of household filing status might be available for married couples. So what is really a dependent here? Let's talk about that. So a dependent is someone who relies on another person for financial support, such as housing, food, clothing, necessities, and more. Typically, this includes your children or other relatives, but you don't necessarily need to be related to the person to claim them as a dependent on your tax return. In the right circumstances, you can claim a domestic partner as a dependent. So once you identify someone as a dependent on your tax return, you are announcing to the IRS that you are financially responsible for another person. For tax years prior to 2018, taxpayers were allowed to reduce their taxable income by a certain amount for each dependent claimed on a tax return. This is known as an exemption deduction. Beginning in 2018, the exemption deduction goes away until 2025. So the credit for other dependents is $500. A credit is different from a deduction in that the credit directly reduces your tax, while a deduction reduces the amount of income that is subject to tax. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let's talk about the requirements for claiming a dependent. So the IRS rules for qualifying dependents cover a significant number of situations, but the basic rules will cover almost anyone. So there are two types of dependents, each subject to different rules. So first of all, we have a qualifying child, and then we have a qualifying relative. So for both types of dependents, you will need to meet certain criteria. Let's first talk about the qualifying child. So for a qualifying child, you need to pass the following tests related to the following areas. So we have support, citizen or resident, income, unmarried person, age, residency, and relationship. So for support, to meet this test, the child cannot have provided more than half of his or her own support for the year. This test is different from the support test to be a qualifying relative. What about citizen or resident? You are only able to claim someone who is a U.S. citizen, U.S. national, U.S. resident, or a resident of Canada or Mexico in most circumstances. What about income? Your qualifying dependent may earn income, but they have to have gross income of less than $4,700 in 2023 to be claimed by you as a dependent, and this threshold increases to $5,000 in 2024. Also, unmarried person, the person you want to claim as a dependent cannot be married to another person and claimed on their return either as a filer or as a dependent. What about the age? The qualifying child must be under age 19, or if a full-time student under age 24. If your child is permanently and totally disabled, there is no age limit for claiming them as a dependent under the qualifying child rules. What about residency? The qualifying child needs to have lived with you for more than half the year, though several exceptions apply to this rule. And what about relationship? The child can be your son, daughter, stepchild, eligible foster child, brother, sister, half sister, stepbrother, stepsister, adopted son, no, adopted child, or an offspring of any of them. So the possibilities are there. Now let's talk about qualifying relative. So to meet this definition used by the IRS for a qualifying relative, this person does not necessarily mean a blood relative or someone who is related to you by law, such as a stepson or a stepdaughter. Domestic partners can be qualifying relatives under IRS rules if they meet the following criteria. So there are actually 6 criteria. So you have a residency, income, support, citizen or a resident, not claimed by another, and unmarried. Let's quickly go a little granular here. So when we talk about residency, to claim a qualifying relative as a dependent on your tax return, they must live at your residence all year or appear on the list of relatives who do not live with you in IRS Publication 501, which includes around 30 different types of relatives on the list. What about income? To claim your domestic partner on your tax return as a dependent under the qualifying relative rules, your partner's gross income for the year, meaning income from all sources, cannot exceed $4,700 in 2023 and $5,050 in 2024. What about support? You must provide more than half of your partner's financial support during the year. What about citizen or resident? Basically, your partner must be a U.S. citizen, U.S. national, or U.S. resident alien. A resident of Canada or Mexico might also qualify. Now, we also have not claimed by another, so no one else, such as your partner's parents, can claim your domestic partner as a dependent child on the tax return. What about unmarried? Well, your partner cannot be married to someone else and file a joint return with that other person, except to claim a refund of withheld income tax or estimated income tax paid. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about claiming a domestic partner as a dependent. So let's really quickly talk about that. So claiming a partner as a dependent. So you can claim a boyfriend or girlfriend as a dependent on your federal income taxes if that person meets the IRS's definition of a qualifying relative. Okay. So don't get tripped up by the word relative here, because according to the IRS, it can include an unrelated person who passes the 4 following tests concerning residency, income, support, and status. So the first question is your partner an official resident? So your partner must be a member of your household, meaning that they lived with you for the entire calendar year. The law makes exceptions for temporary absences, such as vacations or medical treatments, but your home must have been that person's official residence for the full year. However, if your living situation violates local law, you cannot claim that individual as a dependent. In some states, cohabitation by unmarried people is against the law. So how much does your partner earn? So if your partner has gross income above a certain amount, you cannot claim that person as a dependent. So gross income is any income from any source that's subject to tax, whether, let's say, it's taxes, interest on a bank account, or other types of taxable income. And the limit to gross income varies from year to year. So for 2023, the income is $4,700, but 2024, it goes to $5,050. So how much money do you spend on your partner? You must have spent more than half of your partner's living expenses during the calendar year for which you want to claim that person as a dependent. So when calculating the total amount of support, you must include money and support that you and other people provided, as well as the individual's own funds. In other words, if your partner took money from a savings account to pay for, let's say, food, housing, or let's say other living expenses, and the total amount withdrawn is more than half of the person's living expenses, you cannot claim them as a dependent. So, and the IRS is really a sort of gung-ho on those criteria, because they want to make sure that you are indeed you want to claim someone who does not have the financial wherewithal to actually take care of themselves, and that you actually spend the appropriate money on them. And so the question here is that as you are trying to claim a domestic partner as a dependent, the question is, are you the only person claiming your partner as a dependent? Because if your partner has already been claimed as a dependent by another person, you can't also claim them as a dependent. That makes sense. Only one person, and the IRS is really strict about that, only one person or tax return, in the case of married couples filing jointly, may claim a specific tax dependent in any given tax year. Also, you cannot generally claim a married person as a dependent if they file a joint return with their spouse, and that makes sense. Now, if you are having questions, or let's say you want to have more explanation, clarification, there is online help. The IRS website offers an online assistant that can help you determine whether your boyfriend or girlfriend qualifies as a dependent. Of course, if you prepare your taxes with a tax software provider, they'll ask you simple questions about your living situation and tell you exactly who can and cannot be claimed as your dependent. Okay, this is very important. So the bottom line here is that can your domestic partner claim you as a dependent? Yes, your domestic partner can claim you as a dependent on their tax return under qualifying relative rules for determining dependency status. Dependent don't necessarily need to be related to you to be claimed on tax return. And so what challenges do you face claiming a domestic partner as a dependent? First of all, you have income limits that poses challenges. Living together, yeah. Do you have to be related to claim someone as a dependent? No. And how does a dependent affect your taxes? It really depends on your situation. So, like, claiming a dependent on your return can have a significant impact on your tax situation, especially if the dependent opens up your ability to claim additional tax deductions and credits. So, however, not all dependents are created equally. If you have a qualifying child, for instance, one of the most substantial benefits comes from the enhanced child tax credits. And so, is there a family tax benefits to claiming dependents? Well, it depends. When you claim a dependent as a single filer, you generally can file taxes under the head of household filing status. This entitles you to a larger standard deduction and wider income brackets among a number of other deductions and credits you won't be able to claim as a single filer. So basically here, claiming a domestic partner as a dependent, however, doesn't allow you to change your filing status to head of household. The IRS does not allow you to claim a domestic partner as your only dependent and file as head of household. The only way to claim a domestic partner as a dependent and also file under the head of household filing status is also to have another qualifying dependent on your return. So basically, what if your partner is married to someone else? If your partner is still married to someone else, let's say to their previous partner, they must still file a married filing separately return. They can be claimed as a dependent on your return if they're still legally married to someone else because their divorce is not yet final. Specifically, when your partner remains married to someone else, they cannot be treated as a dependent because one of the dependency tests requires the person not to file a return with the spouse. And so under IRS rules, domestic partners are not considered spouses if they're not married under state law. So it's one of those things where you have to really to check your state law. And the IRS refers to these individuals as registered domestic partners. So it's one of those things that you have to see. And one thing I want to say here is that an unmarried couple can both claim, can an unmarried couple both claim head of household? It really depends. If the only dependent you claim is your domestic partner, neither of you can file as head of household. Your registered domestic partner is not one of the specified related individuals that qualifies you to file as head of household. If you claim your domestic partner as a dependent and you also have another qualifying person as a dependent, you may file as head of household. But there are advantages of having a dependent. So despite shelling out thousands of dollars for food, housing, clothing, and more on your dependents, you might finally get a financial break come tax time by claiming them as qualifying dependents on your tax return and seeing some significant tax savings. So the IRS provides dependent child, relative, and non-relative tax deductions and credits that you can use to reduce your tax bill. So while the child tax credit is typically the most generous, non-relative dependents like domestic partners can still enjoy the other dependent tax credit amounting to as much as $500 in value. So this is pretty cool. So let's wrap it up here. So what are the criteria for claiming your boyfriend or girlfriend on your taxes? So if you want to claim your boyfriend on your taxes or girlfriend for on your taxes, all of this must be true. We'll put this on the screen so everybody's clear as to what the rules are. So you cannot be someone else's dependent even if they don't claim you as a dependent. He or she cannot qualify as anyone else's qualifying child. He or she cannot file a joint return unless he or she is only filing to get a refund of tax withheld. He or she must be one of these: U.S. citizen, U.S. resident, U.S. national, or resident of Canada or Mexico. He or she must have lived with you all 365 days of the year as a member of your household. He or she must have gross income. Income does not exempt from tax of less than $4,200 this year and $5,000 next year. So this includes the taxable part of this: Social Security, pensions, scholarships, unemployment, all other taxable income. You must have provided more than half of his or her support. This includes all money spent supporting the person, like food stamps, housing assistance, other government assistance. So it's one of those things where you have to see exactly that it works for you. So those are the 5 criteria. So we're talking about what? We're talking about support. So the conditions to claim an unmarried partner as a dependent: support, citizen or resident, income, relationship, unmarried person. Okay, if the person is married, you cannot claim that person as a dependent. So support, you must provide at least 50% of the other partner's total support for the year. So support includes food, shelter, clothing, medical and dental care, education, entertainment, and just about any expense you can think of. I've already explained the resident and or the citizen or resident sort of criterion. Income also is important. Now, the supported person's gross income cannot exceed a certain amount for the year, but it's just those amount changes all the time. So it's one of those things where you have to check the IRS's website. But non-taxable money such as gifts, welfare benefits, and non-taxable social security benefits don't count towards gross income. Okay, and you also make sure that the person is unmarried. Okay, but long story short, you will claim a dependent on either Form 1040 or Form 1040 SR. When you claim a dependent, you will enter their social security number along with other qualifying information. A dependent can only be claimed by one taxpayer, so the IRS uses the dependent's social security number to track this information. And claiming a dependent is pretty straightforward, but it's probably one of the most complicated areas of the tax code, depending upon your situation. So if a boyfriend or girlfriend is a member of your household and they meet the qualifying relative requirements, claiming them as a dependent may help you save money on taxes this year. Thank you so much for your attention. I really appreciate it. In today's conversation, I just had a comprehensive review of claiming a domestic partner as a dependent. So I explained to you what the IRS checks, and then I wrapped it up. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.